Silver has done something extra special today, and it's not just about how much the price moved. What's really grabbing attention is which competition it just crushed and why it happened. Let's get straight into it. Silver just hit a fresh 2-month high, breaking through the mid-60s range and pushing past $68 an ounce. The session high touched $69.11. Over the past month alone, silver is up more than 18%, and this is verified market data, not a random spike from retail buying or general inflation talk. This move was triggered by one specific event out of Washington, a major bond buyback announcement from the U.S. Department of the Treasury. Before we dig into why that matters, I want to flag something for anyone who collects physical metal. Our sponsor, Summit Metals, is launching on the Whatnot app on September 3rd, right during Whatnot's biggest coin and bullion event of the year, the Whatnot Coin Show. The show runs September 3rd through the 5th, with live entertainment and top sellers from across the bullion world all in one place. Summit Metals' debut show is worth watching closely because they are giving away gold and silver every 5 minutes for a full 72 hours straight. That works out to 864 giveaways across 3 days. On top of that, they're putting up $700,000 worth of silver eagles. Anyone who buys eagles knows they almost never trade at spot price, but Summit is offering 10,000 of them at spot and another 500 at 30% below spot. New viewers also get $15 off their first Whatnot purchase automatically, just by downloading the app through the link in the description and bookmarking the September 3rd show. It's a 3-day window, then it's gone. Now let's get back to the real story, because the reason silver is outperforming gold so dramatically today is where things get genuinely interesting for anyone tracking the metals market. Here are the numbers as they stand right now, and this data is current and verified. Gold is actually down $1.20 on the day, sitting at $4,522.80 after being higher earlier in the session. Silver, meanwhile, spiked 1.67% in late trading, up $1.12 to $68.27 after touching that session high of $69.11. That is a serious divergence between the two metals in a single trading day, and it tells us something important is happening underneath the surface. We could be on the edge of $70 silver again very soon, and the setup behind it starts with a decision the Treasury made just days ago. To understand why silver rallied this hard, we need to go back to what the U.S. Treasury did on Wednesday. This has been building for a few days now, and the effects are still working their way through the market today. The Treasury announced it would at least double its bond buyback operations at the long end of the yield curve. So what does that actually mean in plain terms? When the government buys back its own long-term bonds, it injects liquidity directly into the financial system and pushes long-term Treasury yields lower. When yields fall, holding cash or bonds simply pays less. That immediately weakens the US dollar index. And as anyone who follows precious metals closely already knows, a weaker dollar combined with falling yields is exactly the kind of environment that fuels non-yielding assets like gold and silver. This isn't just my read on it either. The head of U.S. rate strategy at TD Securities pointed out that this buyback is likely just the first of several moves the Treasury may take to support the long end of the bond market. In other words, Wall Street is reading this as the government stepping in to prop up its own debt market, and institutional money reacted immediately by rotating into hard assets. That's what pushed silver straight towards $67 and then $68 an ounce. Gold also moved higher, crossing back above $4,500 an ounce, but silver was clearly the star performer here. That raises the obvious question: why does silver outperform gold during a monetary shift like this one? The answer comes down to silver's dual identity. It behaves as both a monetary safe haven asset and a critical industrial commodity, which is a combination gold simply doesn't have in the same way. When macro liquidity enters the system through something like a treasury buyback, industrial commodities and monetary metals both catch a bid at the same time, and silver sits right at that intersection. On top of that, silver has a much smaller market cap than gold. That means when institutional capital rotates into precious metals, the price move in silver tends to be far more explosive on a percentage basis. That's exactly why silver can gain over 18% in 30 days, while gold moves at a steadier, more measured pace. That steadiness actually says something positive about gold's stability, but for traders looking to capture momentum right now, silver is clearly where the action is. Now, this move hasn't been a straight line higher, and it's important to be honest about that. After testing $67, silver pulled back slightly toward the 66 zone before pushing higher again. Profit taking is a completely normal part of any strong rally, and dips like that tend to become buying opportunities for traders who are tracking the trend rather than reacting to every small move. At the same time, the Federal Reserve released its latest meeting minutes, and hawkish members inside the Fed reminded markets that inflation risk hasn't fully disappeared. That leaves the door open for another rate hike if future economic data supports it, though that remains a genuine if rather than a certainty. This sets up a real tug of war in the market right now. On one side, the Treasury is injecting liquidity through bond buybacks, which tends to weaken the dollar and support metals. On the other side, the Fed is signaling it could raise rates again to keep inflation in check, which would normally work against metals. This is the kind of environment where headlines create noise, but technical traders are focused on something more concrete, the actual support and resistance levels on the chart. Combined with the broader geopolitical backdrop, including oil prices also moving higher, here's what's worth watching closely. On the resistance side, there's a technical target zone between $67.11 and $70, with $70 standing out as the key psychological level everyone is watching. Silver has already broken through $67.10, and it's currently trading in the $68 range. On the support side, $64 to $65 has emerged as the new short-term support following this week's breakout. Below that, there's an invalidation level at $62.50. As long as price holds above that level, the bullish structure stays intact. Right now, we're in a bull run, and honestly, it looks like a continuation of the previous one rather than something entirely new. Major banks, including BBC's analysts, along with voices across Wall Street, are now eyeing targets that extend well into the 70s and 80s heading into 2027. That puts the short-term structure firmly in favor of the bulls at this point, and that's a meaningful shift in sentiment worth paying attention to. Let's talk about what's happening between gold and silver specifically, because the relationship between the two tells its own story. With silver climbing and gold slightly lower in late trading, the gold to silver ratio currently sits at 66.49. That's close to its recent average, which is actually a healthy sign because it suggests there's still room for silver to keep outperforming gold over the coming weeks, rather than the move being overextended. I'll be transparent here too. I had previously predicted we'd see silver's peak just below $67 an ounce. That level broke a full month earlier than expected, right in the middle of summer, and that prediction has essentially been invalidated by the market. It's a good reminder of how quickly conditions can shift when a new catalyst like this Treasury announcement enters the picture. What actually moved silver this fast comes down to the Treasury situation. The Fed and Treasury are effectively dealing with a debt and bond market challenge right now, and the response to that challenge is what's been pushing both silver and gold higher. To summarize where things stand with verified current data, the U.S. Treasury's bond buyback plan has shifted the broader liquidity environment in favor of hard assets, and that's what pushed silver past $67 for the first time in 2 months. It's also worth noting that this isn't isolated to metals. Oil is spiking as well today, up $2.46 to $88.15 a barrel, which tells us this liquidity shift is being felt across commodities broadly, not just in precious metals. When you see oil, gold, and silver all reacting together like this, it usually signals that something structural is happening in the liquidity environment rather than an isolated move in just one asset. That's an important distinction for anyone trying to separate short-term noise from a genuine macro shift, and right now the evidence points toward the latter. So where does this leave us looking ahead? The near-term question is whether silver touches $70 soon, or whether the Fed's hawkish tone drags price back down into one of those support zones we outlined, the $64 to $65 range in particular. Both outcomes are realistic, and that's exactly why the support and resistance levels matter more right now than trying to guess a single number. If silver holds above $62.50, the broader bullish structure remains intact even through short-term pullbacks. If the Fed does end up raising rates further to fight inflation, that could slow the pace of this rally, but the underlying liquidity story from the Treasury's buyback program isn't going away overnight, and that's the bigger force to watch over the coming weeks and months. I'd genuinely like to know what you think. Do you see silver touching $70 soon, or do you think the Fed's inflation concerns pull it back toward support first? Drop your thoughts in the comments, because this is exactly the kind of setup where different perspectives are worth hearing. As always, everything covered here is based on current, verified market data at the time of recording, and prices in fast-moving markets like silver and gold can shift quickly, so please do your own research, DYOR, before making any decisions. I put together this channel to bring clear, independent analysis on precious metals and the macro forces driving them, and I appreciate every one of you who takes the time to watch. If this kind of breakdown is useful to you, please consider rating, sharing, commenting, and subscribing. It genuinely helps this channel keep going.